Hey everybody, how are you doing? Now, as you can tell, obviously someone's decided to join me today. This is our new English bulldog, Winnie, and she was in the other part of the home and a little excited to hear my voice as I was talking. So I had to bring her up here, and now she's falling asleep. But wanted to introduce everybody, obviously, to Winnie. But the more important part of what we're talking about today, I'm really excited about today's webinar. Our special speaker today is actually Tommy Thornburgh, and he's president of Prime Corporate Services. He gives all the credit to his team for truly making a difference over the last 10 years. But if you ask anybody there, he's the brain and face behind all of the company's webinars, presentations, events, and he oversees 50 of the corporate advisors. Now, under his leadership, Prime Corporate Solutions has helped over 100,000 entrepreneurs structure their businesses properly. But even more important, and I love this thing about Tommy he shared with me and with Rick Grant as well, that he's not just someone coming in and saying, okay, real estate agents, here's what you need to do. His wife, his mom, his dad are all real estate agents. His dad is now retired. His mom and his wife, they are real estate agents here in the state of Utah, actually, my wonderful home state. And his dad, growing up, actually owned a brokerage in Nevada. And super excited about everything that he's going to bring forward to the table, that he's going to be able to have available to all of us. And one thing I really liked was, as their CEO and visionary, Steve, he told me, he says, John, listen, we can save people 20% on their taxes. So Tommy, as president, you've got a whole bunch of stuff to live up to. I'm excited to hear and really talk today with you about how Prime can help everybody achieve that, what's going on in our industry right now, what's going on in our economy. I mean, because that obviously changes everything with the corporate structure and taxes and all of that as well.
Yeah, for sure. Winnie, thank you for bringing John. Thank you for having me. I've got a little English bulldog as well. Her name's Zoe. She's 11. She's turned into an old dog. She's getting a little dementia, unfortunately, but they're such fun dogs. I thank you so much for having me. I'm really excited about this. I had a pretty untraditional growing up here. My parents got divorced when I was 3, and I usually don't open up and share just my personal life story, but I do think it's important based off of the landscape of what all of you do. My parents only really agreed on one thing, and that was that they wanted my sister and I to be self-employed. For that, I am forever grateful. How they stayed together for 3 years, I don't know, but I am grateful that was what they had in common. When I turned 18, I went to North Carolina and knocked door to door selling pest control. And I remember how proud my parents were. And then when I came back and said I wanted to go to college, my mom cried. She's like, I told you, I want you to be self-employed. So, pretty unique in that sense. And I am very grateful for the self-employed history that they shared with me. And that's my goal today, is to help each and every one of you understand that before the end of the year, or if you're watching this in the beginning of the year, you have the ability to save thousands of dollars in taxes, tens of thousands of dollars in taxes. And that's our main motto. It's not what you make, it's what you keep. And if you can set yourself up the right way, you can proactively do a little bit of planning throughout the course of the year. If any of you are like my mother, you just run a million miles an hour, sell houses, and are frustrated every time tax season rolls around. I think that personality specifically will really enjoy this call, because it'll give you the ability to have a game plan and a blueprint that doesn't take time away from your day, but does have something in place to save you thousands of dollars in taxes. So that's the goal here today.
Now, Tommy, this blueprint you're talking about, before we get going, like all of our webinars, this is being recorded and available, but is there also some place they can go, throughout the course of this? Is there a link maybe that you have that they could go to and get more information?
Yes, absolutely. What we'll do for everyone is a free consultation for anyone that's a part of the community. I mean, we'll do primepartner.info /WRE news.
Okay.
So primepartner.info /WRE news. What that will do is that'll get each and every one of you a free hour consultation to break down where you are currently, what you have in place, and if we can do anything to assist in saving you a bunch of money in taxes. But that way you can really get into the weeds on your specific situation one-on-one. And I'll go over a lot of the strategies that we can assist you with here today as well.
Oh, I love that. So I'm excited. So talking about strategies, obviously, real estate agents, that's something they're really big on, right? They go out there, and I love how you said it. If they're like your mom or like a lot of the real estate agents that are my friends, it's just go, 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 and we'll figure it out. And that causes frustration. That causes a lot of angst sometimes as well when it comes to taxes, because if you don't have that plan in place. So I'm super excited to hear, what's that first strategy that you recommend to people, as they're going out there and getting ready?
Yeah, the most important thing for any business owner is making sure that you have the proper vehicle, the proper business entity in place to maximize on taxes. And that's what's great about real estate agents in general is you're generating active income. I mean, it's taxed at the highest rate. Right now, federally, you're taxed between 10 and 37%. And if you're not set up properly with an S Corp election or with an LLC that's taxed as an S Corp, or depending on the state, it might even be a PLLC. But having that S Corp election alone can save you just over 7% on avoiding half of your self-employment tax through Medicare and Social Security. So I think proper entity structure is number one, and having a system to track your expenses is number two. Between those two, this year we will file over 50,000 tax forms. And those are the two areas that we find it saves between $9,000 and $15,000 for our clients that are structured properly and have a way of tracking their expenses. And I'll give you a lot of different ways here today on how you can do so to maximize on your situation.
I love that. It's kind of like, to use that, back to real estate. Would you ever, as a borrower, would you ever represent a borrower who doesn't even know what they qualify for, right? And so same thing, if you're not set up in the right structure, how do you even know how you're going to go about? And okay, 9 to 15,000, you've obviously perked my interest, right? That's that's a big deal. So I'm excited to see kind of where that is and the different levels you have.
Awesome. I put a slide deck together here that I'll share my screen, and I just to keep me on track, and we'll kind of go through it here. So maximize commissions, minimize taxes. It's not what you make, it's what you keep. Prime Corporate Services, just to back up what you said, we were established and founded back in 2012. And since then, we've got 350 employees and over 150,000 businesses that we've helped structured, and full tax firm, everything else. So kind of an interesting time. And one of the areas, and I'll talk a little bit about this, we do a lot of business credit development. We're currently helping get business owners over $4 million a month in business credit and corporate funding. Chase Bank's corporate just barely flew out. I just got this. I was meeting with them this morning about the landscape of current entrepreneurship, and Dun & Bradstreet reached out to us and are wondering, how in the world do you get these entrepreneurs so much credit? But the reality is you got to stay ahead of these changes, right? Banks are shutting down. There's people that are concerned about the markets. What we do know is the tax code is really not that old, right? It's not that old, all things considered. And when we look at what taxes are, we know that there's always going to be changes. With Trump getting back into office, a lot of the changes are going to lean more towards entrepreneurial and towards business owners, which ultimately benefits each and every one of you as an agent or as a broker. So the tax code is a game. And that's kind of the way that I look at it, is it's over 70,000 pages. And the more that you know how to play the game, the easier it is to win. And it doesn't have to be areas that completely drastically change your life. If we simplify taxes throughout the course of the year, January, February, March, quarter one, April, May, June, quarter two, so on and so forth. October, November, December is business shopping spree season. And you guys are going to get sick of me referencing my mother, but I love her to death. I'm a mama's boy. You'll find that out very quickly. And those of you that like shopping, those of you that want to know what your profit and loss is, you can't choose your family. You also can't choose this business partner that's tied to your business, and that's Uncle Sam. The tax code is set up for use it or lose it. And if we plan accordingly in the fourth quarter, if you know what your profit and loss is, and you know what your tax liability is going to be, it puts you in a position where you can make decisions on maybe purchasing investment properties, helping with your marketing spend, investing into what's going to benefit your future, as opposed to just writing a check at the end of the year come tax time. So that's one of the big passions that I have around taxes is the more money that you can keep, the easier it is to really build and create more legacy. So before we get into the good stuff, everyone's favorite part, legal disclosure. I got a full team of attorneys. You know I have to do it.
I was going to say, where's that guy in the background that talks really, really fast, right? You know. But I love what you're saying there, that now's the time, actually. October was when we should have started thinking about our taxes, is what I'm hearing. It's not January, February, April comes around, I'm going to do an extension. It's actually around October-ish when you should actually be talking with your accountant, talking with people like Prime. Is that what you're saying?
Yeah, come January 1st, it's too late. And the reason for that is after January 1st, sure, you can contribute to retirement accounts. You can run a cost segregation study and accelerate depreciations. And the other thing that I really like about the conversation that we're going to have today is, as an agent, this is something that I talk to my wife a lot about. The reason she got her license is so that together we can get real estate professional status to be able to take more depreciation from a real estate standpoint. And you as an agent, you as a broker, if you can talk about these strategies from an educated aspect, now you're going to be able to help more investors get into more properties to close more deals, while simultaneously being able to build up some cash flow for yourself, as opposed to a lot of active income. That's oftentimes agents find themselves in this cycle where, sure, you make a ton of money, but if you're not investing into your future and creating some cash flow, you can't speak to what it really is in most cases on how you can help other investors as well. So I think that's a powerful thing about taxes also.
Now, one thing before we get really going, Douglas Tursky had a great question. He says, while I understand the benefits of an S Corp, if a solo owner employee of the S Corp, is it fair to say all the commission should be paid out as salary as a sole rainmaker? Does that make sense?
Yeah, really good question. So the reason that I love LLCs taxed as S Corps is because LLCs and S Corps are fundamentally very similar, where they will flow through to one overall tax return. So when you have that S Corp election, you can pay yourself a salary, to your point and to your question. You can also set it up where it's more of a distribution. And the reason that that's important is a lot of people think that, I don't know if I want to go salary where I have to pay the same amount weekly or biweekly or monthly. You can pay yourself X amount month one, not pay yourself month two, and take a distribution month three, where it's not as consistent when you're the solo owner. So a lot of times with the agents that we work with, they prefer going the distribution route as opposed to the salary route. And the major difference, tracking and saying when you're paying yourself, what you're paying yourself, to give yourself a reasonable salary. So if you make $100,000, you can do the salary, or you can say I distributed $50,000 throughout the course of the year, and it's about a 50% distribution. So you have two options there between salary and distribution. It doesn't have to just be salary. That's a really, really good question.
Awesome. Thanks, Tommy. And hopefully that answers for you, Douglas, there.
Yeah. Everyone's situation's different. Legal disclaimer. There it is. So here's kind of an overview on what I want you to think about and what I want you to look at. I don't know why we did Florida, but I think the last real estate event I spoke at was in Florida. So that's probably the same slide we used here. But just to kind of give a breakdown on how quickly tax planning can impact your overall situation. If you make $100,000, the federal income tax rate at $100,000 is 22%. So you're writing a check for $14,000 and some change, not including state tax, depending on where you live. Social Security, Medicare, right about $7,000.
Mhm.
So the total tax is just under $22,000, right? So the way that I like to have people think about this is, in my opinion, a tax return is the worst thing in the world, right? And the reason I say that is when you're W-2, you go to work, you exchange your time for money, they take taxes out of your check, you pay your bills, you hopefully have some left over. And when they tell you you're going to get a $5,000 or a $10,000 return, all that means is that you overpaid and gave the IRS an interest-free loan. The beauty of being self-employed, the beauty of being an agent and a broker, you go generate your own revenue, you reinvest back into your business and back into yourself, and then you pay taxes on what's left. So knowing that that is the case, you can make strategic decisions that will benefit your business's future, as opposed to just feeling like you have to pay this $20,000, $22,000 on a simple $100,000 example, right? So once you have these federal taxes, once you have these state taxes, we all know it does not stop there. Property tax, gas tax, sales tax, capital gains, gift tax. Number 9, sin tax. You're so sad from all the taxes that you have to pay that number 9, you go buy a drink and you got to pay tax on the liquor, the sin tax, right? Travel, as there, it is endless. You are paying tax on everything that you are doing. And if you really think about the bottom line, one of the big messages that we try and share is, if I came on here and I told you, I'm going to give everyone that attends live $10,000. What's the catch, right? Sounds great. I'd be the most popular person in the world. But when I come on here and I say, here's a very easy way to save $10,000 before the end of the year, it just isn't as exciting. So if we can combo those two, go generate more revenue. Let's keep the main thing the main thing. But if there's some tax planning that happens throughout the course of the year, compounding the 10,000 savings with the 10,000 income to make a $20,000 difference year over year is really what starts to add up throughout the course of the year, right? So with that being said, I wanted to throw in these slides knowing that we are doing this November 20th live. If you're watching this, these will still be applicable, but I wanted to give you just some quick wins on things that you can do and takeaways that will save you thousands of dollars in taxes. For any of you that are paying for your insurance, check with your insurance provider if you qualify for a health savings account. You can go open up a health savings account at a credit union, at a bank. You can go online and set up an HSA. If you're single, you can put $4,000 and some change into it. If you're married, it's just over $8,000. But it's one of the only triple benefits when it comes to taxes. So here's an example. Here's how I utilize this strategy. I'm married, so I put just over $8,000 into it this year. The number changes every year, by the way. You don't want to go over the limit or there's penalties. I think this year it's like $8,400. So if I put $8,000 into it, I get an $8,000 deduction. Now I get to grow and invest that money tax-free if I have medical bills, co-pays, any insurance-related expenses. I can pull that money out like a savings account, and it is another tax-deductible expense. So it's tax-deductible going in, it grows tax or interest-free, and then if you pull the money out for medical-related expenses, it's a savings account. It's your money, and it's deductible coming out. So last year we had a baby. We pull the money out of the health savings account. It's tax deductible going in, tax deductible coming out. You go to YouTube University, they tell you to buy a Land Rover, a Range Rover, a G-Wagon. These are some very realistic things that you can do. Health savings accounts before the end of the year, make a contribution, you get a tax form. It gives you thousands of dollars of write-off, whether you're single or married. So if you don't have an HSA, this is a quick win for you here as well.
So an HSA, is it use or lose? How does that, because I know there's a lot of confusion for people out there. Like Dennis said, where do we find out where the cap max amount is for the HSA account? Is that something that you can provide to people afterwards? Is that, what? And then my question, what is it use or lose? Does it then come back in? Is it taxed, at the end of the year? So you start putting in again at the beginning of the year?
Yeah, great question. So every year the limit changes.
Mm-hmm.
This year, if you're single, it's 4,150. So you wouldn't want to contribute more than that or there's penalties. If you're married, it's 8,300 this year. So if you're over 55, you can contribute an additional $1,000 on each. But next year, that limit will likely go up. But no, it isn't use it or lose it. It really does truly just work like a savings account. So a lot of times you can put the money in, and if you're taking the money out to reimburse yourself for medical related expenses, you can do that. I had a health savings account for years with just a credit union, and I would transfer it from a personal account over to the health savings account, and then I'd transfer it back if I had medical related expenses. But you can also set up health savings account where you can invest those into the market and they grow interest free. So it's not a use it or lose it. It truly does work like a savings account.
Okay, that's awesome. That's something I didn't understand about an HSA, right? I think most people here, correct me if I'm wrong, everybody. FSA is use or lose. Peg just stated that. Is that okay? So that might be, see, I'm learning something new today. I love it.
There we go. Mission accomplished. Winnie, you're next. We're coming for Winnie next.
Yes.
We'll get her a guard dog and be able to write that off as security here shortly. We're getting there, Winnie. Hang tight. Oh, here we go. So here's the limits for 2024. Feel free to screenshot this or take a picture of this. So 4,150, 8,300 for a family. So this year I'll put 8,250. I'll make sure to get that as close as I possibly can to make sure that's a deductible expense. And then here's the other thing. So we work with a lot of agents, brokers, and really just real estate investors in general. And retirement accounts are kind of a funny one because I got a lot of investor friends that really dislike retirement accounts, but it all depends on your strategy. It all depends on what your goals are. It all depends on where you are in your life. And contributing to retirement accounts, I do it. It's not my favorite thing in the world. I haven't had a lot of growth on the retirement accounts, but if it's a way for me to save some money in taxes and prepare for the future, great. If you don't want to do that, there's plenty of other strategies. That's why I try and come with as many options as I can with you to really make it feel like it fits your investing style without making it feel like you're just spending money on nothing. Right?
I like that. Back to the other slide. If you can go back.
Sure. This one?
Mary just asked, can you have an HSA if you are on Medicare?
Oh, that's a really good question. Let me double check.
Love that. Yep. That's one thing, Mary and everybody, for me, I love the fact that he's saying, listen, I don't know, but I'll find out, right? A lot of companies, a lot of salesmen will just be like, oh, yeah, don't worry about it. But I love how Tommy's saying, you know what? Great question. Let me see.
Yeah, thank you for that. It looks like you are able to. You'll have to check as long as you had the HSA. Oh, it says before you enrolled into Medicare. So what I would recommend in situations like that is contacting the Medicare provider and seeing what the options are for a health savings account. It does say on here that you need to have it before. I'm sure there's a way around that. I would contact the Medicare provider and see if there's a way that you could potentially do it in an enrollment year. A lot of times that's how those things work with insurance is they base a lot of it off of enrollment. So it looks like you can, but if it needs to be set up before, verify and just make sure. I don't want you to put money into it if you're not getting a tax benefit. You might as well use a credit card and just get your reward points, right?
Perfect.
Very good question. Travel's a big one that seems to be a no-brainer when you're going to conferences or if you're going to meetups or when you're traveling. There's a lot of expenses that go into travel that oftentimes get missed. And so one of the big things that I'll talk about when I talk about how to track and organize your expenses, whether it's QuickBooks, an Excel spreadsheet, one designated credit card. One of the biggest mistakes that people make when it comes to taxes, and I'm going to reference my mother, is commingling funds, right? As agents, I know you, I've met a lot of you. I live with one of them and was raised by one of them. You make money, you spend money. Not always, but a lot of times that tends to be the case. And when you're commingling funds like that, you don't remember what you had for lunch last Tuesday. You're not going to remember if it was business related a month from now. So when you're thinking about travel, not only does the transportation, the meals, the lodging, the dry cleaning, make sure that all the dollars that are being spent that you can connect back to your business allow you to be deductible expenses. What I love about businesses like agents and brokers, you can't go anywhere without talking about real estate, right? It's like me. I can't go anywhere without someone asking me about taxes anymore. And a lot of that becomes connection on expenses that are made that you can utilize as deductible expenses. So commit to something that you're going to do to track your expenses, and it'll make this a whole lot easier on you as well. Right? Business plans. This is a really interesting one. Some of these next couple plans are going to be for some of the higher earners, but business plans, you can put plans in place. This one's section 105, medical reimbursement plans, where I can have my wife as a board member. I can have family members as board members. I can have medical expenses that happen throughout the course of the year and have medical reimbursements, phone plan reimbursements, vehicle reimbursements. The reality is you have people that do things for you. And even though they're not on payroll or they're not your direct assistants, how can you incorporate them that if you're paying them, you can make sure that it's a deductible expense without having to formalize or have those on business related expenses as well, right? This one's really awesome for really, especially startup or newer agents. When you are first, there's no tax code that says you have to be a great business owner, but there is a tax code that says as long as you have the intention to generate income, you can take business related deductions. So if you're just getting started and you haven't done your first deal, you can still set up an LLC. And you can still show that there is money and there's time that's being spent in being a business owner and being an agent. $5,000 in startup expenses, $5,000 in organizational expenses. We had a client last December. I met at an event and he said, Tommy, I'm not doing anything till January. I'm not going to set up an LLC. Okay, cool. To each their own, no big deal. I was like, what if I do it for you for free? Oh, well, now I might consider that. So I set up an LLC for him for free. I filed his taxes for free. He made $55,000 a year as a W-2 earner, made $0 self-employed, but he had invested into starting his business. We wrote off $5,000 in startup. We wrote off $5,000 in organizational. Off of a $55,000 a year annual income, we saved him $5,400 in taxes by simply writing off expenses in starting off a business. So I kind of joke about this, but as soon as my 3-year-old can pour lemonade into a cup without spilling, we're setting up an LLC. We're taking deductions. We're going to go the whole financial route, right?
I love that.
So there's even from startup to successful business with cash flow, there's a lot of deductions that you can still utilize and maximize on tax strategies.
Now, Dennis just had a great question back to that previous one. He says, if I've had my LLC form for a couple of years, but didn't do anything with it, and just now I'm starting to use it operationally. So the state law in New Jersey just changed for individual contractors. Yep. Does that count to what you're talking about?
New Jersey is always trying to get funky. I know that for sure. You go to Massachusetts, New Jersey, New York, California, they're going to give you the runaround for sure. So a lot of people say that if you don't make money 3 out of your first 5 years in business, you can't. That is not really a tax code. That is where your audit risk starts to increase. So a lot of accountants have said this for years and people truly believe it. But as long as you're changing the business plan, as long as you're showing that you have the intention to generate income, I would still look at that and review that with your accountant on the expenses that have been made and how you can utilize those as deductible expenses. I can tell you, I mean, I think I've got 90 accountants now total that work with our accounting company here at Prime. And we would look at taking those deductions for you for sure, because you are investing into your business and you're investing where we can show that as a loss. Mm-hmm. And even if you could only take $5,000 for startup and $5,000 for organizational, but there's $20,000 of expenses, we can amortize the additional $10,000 over 15 years. So take it as a write-off would be my point, but that you should be able to do that. A lot of it's going to depend on your accountant.
And once again, a lot of these questions get answered in that free consultation. I don't know, can we pop that back up real fast again in order to, for people, leave it up there for a second. A lot of these questions are fantastic questions. And I know today's webinar is very informational, and a lot of these questions you're going to want to go deeper. And so take advantage of that offer from Prime to be able to dive deeper into that. And that's the first I've ever heard of Taxachusetts. So I think I'm going to take that, Tommy, and use it, because it's kind of brilliant. I love that.
Yeah, it's funny. It's there's someone from Taxachusetts was the one that told me that a couple of years ago. I was like, same thing. I was like, I'm taking that.
Yeah. And then Elizabeth asked, would this be for any type of startup, not just real estate? Correct. This is any business just starting up.
Correct. Yes,
Perfect.
That's really good question. Yeah, I love real estate. I own 78 doors of real estate. Like I said, my mom, my wife, my dad, real estate was around me my whole life. And my wife got her license just so that we got that real estate professional status. Like I said earlier, real estate's so easy to save money in taxes because of the real estate professional status. But this goes for any business. There's different tax codes for every business. Real estate is just so easy.
No, and that's just it. I mean, and that is one thing the real estate industry has done, is really putting that profession itself into a protected area where you can get the more write-offs. You can. By the way, I have to point out, she loves to sleep with her tongue out. Just, I don't know if your bulldog does the same thing, but they're the cutest things in the world. But the real estate industry itself has done a great job protecting itself in the realm of taxes, in the realm of getting in with legislators, with Congress to get these laws passed. And, that's something that, Charlene, I don't want to put up your whole question, but at the very end, she says, I'm certain I've missed many great tax opportunities over the years by not doing this. And I think the majority of us, until you learn about it, and I want to put that in there, don't ever feel bad for not doing something you weren't aware of, but definitely once you learn about it, then you do need to take full responsibility and get that taken care of. And so I love that Charlene said that, she's certain she's missed many great tax opportunities. And so, this is one of the reasons why we have Tommy here today talking about this, to help get people thinking that, okay, I do need to be looking at this. I mean, today for me, FSA versus HSA, I learned something and I felt like I was pretty knowledgeable. I'm not going to lie. It's rare that I feel like I'm not aware of something, and I even learned something new for me.
Yeah, no, that's great. And I can go on and on. This is another big one too, that a lot of people don't utilize and take advantage of. If there's any golf fans, that the Masters golf tournament is in Augusta, Georgia every year. And back in the 1970s, a gentleman got audited for renting out his house during the Masters golf tournament. And it ended up getting passed by Congress and the Senate. It's now Section 280A. It's referred to as the Augusta Rule. And what this rule says is you can rent your house out up to 14 days a year tax-free. And these are things that agents do without realizing that they could utilize this from a tax standpoint. So how I utilize this strategy is on the 5th of every month, I have a rental agreement. My business rents out my house. I go over my minutes, my meetings, my bookkeeping, my monthly goals, my quarterly goals, my annual goals. I track it. It saves me $10,000 to $20,000 a year in taxes. I transfer the money from the business directly over to the personal side. So if I was to rent out a conference room in the Marriott, no one would bat an eye that it's a business related expense. If I repurpose that and say that I'm using my house as opposed to renting a conference room, I need to track it. I need to have an alibi. But when you schedule the call, ask. We have a really cool Augusta organizer that just outlines what you need to do to track it, so that worst case, you were to get audited, you have the proof, you have the record keeping that says, no, I'm doing this for business related expense. Very easy tax strategy that, like I said, saves a lot of our clients $10,000, $20,000 a year in taxes. It's really, really cool.
And I love that it's the Augusta rule. I'm not going to lie.
So great.
People in Congress understand golf, so for them, they're like, yeah, Augusta rule. It makes perfect sense. I love that.
This tax law went as far. In Golf Digest last year, I read that there was a couple houses in Augusta, Georgia that were renting their house out up to $30,000 a day. It does have to be reasonable. It's got to be a reasonable amount.
Okay.
You can find out what your house would rent for on an hourly basis on a website called peerspace.com. It's PEER space.com. Or even just a comparable for like VRBO, BRB, something like that.
Yeah.
Hiring your kids, another good one. Once again, growing up, I did plenty of work for my mom. My mom always tells this story about how I was, Mom, for sale by owner. Don't you know that you need to go get that listing. Hiring your kids is something that I'm very passionate about. I've got 2 little girls, 3 and 1. Both of them this year will conveniently make $14,500. That number changes as well based off the standard deduction every year. I pay them. I get the write-off as a business owner. They don't make enough money to pay money in taxes. So not only is it a deduction, but I get to teach my girls work ethic. Mm-hmm. First thing, John, that you mentioned is started giving them chores at 3 years old. Yeah. A lot of times when I do this presentation, if there's an accountant here or anything else, they go, Tommy, they need to be 8. What can a 3 and a 1-year-old do? Well, my girls are models. They look like their mother. Lucky for them. Otherwise, they wouldn't be models. But I have them on consulting websites that I have. I have them on properties that are being rented out. Last I checked, models get paid money. Mine both happen to make $14,500, and I track it. I organize it. It's a great way to teach your children financial literacy, but also an amazing tax strategy and tax deduction as well. So,
and a great question, Tommy, from Melissa, but don't they have to pay Social Security tax? So when you pay your children that, how are taxes handled? How are those taken care of?
So the standard deduction changes every year. This year, let me go back to this slide here. This year, the standard deduction limitation is $14,600. So if I pay them less than that standard deduction, they technically don't make enough money to file a tax return or pay that Social Security tax. Last year it was $13,800. The year before it was $12,500 or so. We have some clients that will pay their kids like $50,000 a year. If it's over $14,600, then yes, they would have to file that tax return. But it all depends on the year. It depends on the amount. It depends on what they're doing for work. Mm-hmm. It has to be a reasonable amount. This is one that we have another really cool tracker to say what you're paying your children for, when it is, just to make sure that you have the proof. We want it to be legitimate. If they're helping you with mailers, if they're helping you with signs, if they're cleaning your office, it needs to be legitimate, right? It's not like you're just writing it off to write it off. These things have to have game plans in place, but a lot of it depends on the amount. So
now, Peg mentioned, this is kind of cool, Tommy, has a coworker that pays the kids that, right? And then the kids invest that into their college fund. So it's really a double-edged attack on their future. Yeah, my daughter, my 3-year-old, had this really good idea to actually put it into an IRA and roll it into a whole life insurance policy. And it'll be $1 million by the time she's 25 that she'll be able to lend against it. But yes, those are things that you can absolutely do. You got to set up a separate bank account. Mm-hmm. I can't believe that's a great idea, honey. We should absolutely invest your money into an IRA. Why didn't I think of that? Yeah.
You hit it right on the nail.
That. Now, what about grandkids or nieces or nephews?
No, unfortunately, they do have to be direct dependents. You can have kids and grandkids on payroll, but that would be a direct contract or a direct employee situation. The only way that this pay your kids works, the way that I'm discussing it here today, is if they are direct dependents. That's a really good question.
Gotcha. Perfect.
And then just a couple, vehicles, bonus depreciation. Right now, 60% depreciation. It was going through Congress and Senate to come back to 100% depreciation. It got denied. There's a lot of talk that now that Trump got reelected, it'll likely go back to 100%. But the reason I share a lot of these things with depreciation and with vehicles and things of this nature is it's going to change every year.
Mm-hmm.
And you can have these strategies in place where I've purchased all of my vehicles are over 6,000 pounds so that I can take the depreciation and write off the 60, 80, or 100% as it's dropped the last couple of years. But knowing what that means, if I come on here and tell you that I write off my car, that's the information you guys get all the time. Mm-hmm. 60% isn't as big of a benefit as it was 80% last year and 100% the year before. I'm not going to buy another vehicle this year because the numbers don't work out. And if there's anything that I can tell you, have a tax professional, and hopefully, we're a business, self plug here. We have tax accountants. We can file your taxes. I don't care if it's us. I don't care if you have an accountant. If you're not strategizing throughout the course of the year and you don't have someone that you can contact and say, if I buy a $50,000 car, what is that going to save me in taxes? If you don't know the bottom line numbers, you're kind of shooting from the hip, hoping that you don't overpay in taxes. Don't go buy a car because someone tells you buying a car is a write-off. Do it to where you feel confident and comfortable it's going to benefit your future while saving you money in taxes. That's proactive versus reactive. I couldn't say that enough when it comes to tax planning in general.
Does that 6,000 pounds have to be a new car, or can it be a used car as well?
It can be a used car as well. Good question. Yeah, it can be used. It can be new. And a lot of times this goes back to, I think it was Doug or Dan, I can't remember the first question of, if you're a sole proprietor or if you're a single business owner, which most of you likely are, a lot of the times I get a follow-up question on that is, do I have to buy it in the business? And that answer is no. It can be in your personal name as well, but we got to make sure that we are showing that it is for the business. And if you're not using it 100% for the business, we need to make sure that we identify what percentage of it is business-related use. That's where a lot of times people find themselves. And that's the 60% isn't bad, because if you buy a vehicle and 60% of it is for work, then it really is shaking out as the same thing of what you would have done if it was 100%. You can't depreciate 100% if 60% of it is for the business. Yeah. So you will have to identify some areas like that as well. And that's what makes the tax code tricky. But if you have an accountant or if you have someone that's giving you some of this intel, it really helps to make those educated decisions.
Love it.
This is a super complicated picture that I put together a couple years ago, and I haven't gotten away from it. It can be overwhelming. Please don't let it be. This is just thinking with the end in mind. And the reason that I share this is for those of you that are visual, like myself, where are you going to be? It's not about where you are right now. It's where you're going to be in 1 year, 5 year, 10 year, and beyond. All of you should have an estate plan. Trust, will, living will, power of attorney, prime corporate services, the 4 services that we focus on: entity structure, business credit development, tax prep, tax filing, bookkeeping, and estate planning. Estate planning is so important, and having trust and wills in place is great. If you don't have it, it doesn't mean you have to go do it tomorrow, but put it on your to-do list. And then privacy and protection is something that can be a benefit depending on your investment strategy. If everything you're doing is as an agent, you probably just need the one LLC and tax it as an S Corp. But if you're going to turn this into an investment, where separate your real estate business from your investment business, separate your other streams of income, right? We've all heard the saying, don't put all your eggs in one basket. What I don't love about that is no one tells you what eggs to put in what basket. So the easiest way I can explain it is, don't commingle your liabilities. Don't commingle your funds. think to yourself, it's not if I get sued, but when I get sued. And that's depressing. I know I feel like I'm selling you insurance when I make that comment, but you do things different. I found I was in my first lawsuit. I was 22 years old buying my first investment property and got in a lawsuit buying a property in southern Utah that it was my fault. I didn't review the contract, didn't have it reviewed by an attorney, trust the contractor. And it was a big learning lesson of making sure that things are set up the right way. So I've personally learned the hard way through these things as well. So I wanted to make sure to leave time for questions. The one last thing that I will talk on, we do a lot of business credit and corporate funding, and we have a really cool digital wallet type service. The visual that I will leave you with here is everyone has a legal name, a social security number, and a personal FICO credit score that ranges from 300 to 850, right? A lot of what we do is making sure you have a legitimate business or a business name, an EIN or an employer identification number, but you can also build and develop a credit profile for your business that allows you to build up business credit that isn't tied and guaranteed to your personal credit. So schedule the call, take advantage of the free consultation. If you're brand new, let us know you're brand new. If you're a seasoned vet, let us know you're a seasoned vet. But if you want us to review your entity, if you need help with entity structure, if you're interested in how you can build business credit and corporate funding, or if you need more tax planning or need help from a tax standpoint, we're here for you. Don't hesitate to reach out.
And I love that. And that's really the big thing. There's no, what did we all hear growing up? The only bad question is one that wasn't asked, right? And so, especially when it comes to this, don't ever be afraid, in my opinion, of being the person that says, I didn't know. Because, I mean, just like, Tommy, you go in, you do this consultation, they don't know what you know, and they can't assume, John Stevens doesn't know anything, because that could possibly be offensive to me. But they also can't assume, well, John Stevens knows everything, then otherwise, why would he be coming in and asking these questions? And so, whatever it is, think about how your clients, when they're talking about a home, you want them to ask you those questions. You want them to ask about the kitchen and the history and the taxes and everything like that. And, J.N. Moore said, will there be a replay? Absolutely. So one of the nice features of the software that we use here at Weekly Real Estate News is you will receive a link after this that will actually give you the ability to go in and watch it again. Also, we put it up live on our website, wrenews.com, and you will also be able to watch it on our YouTube channel. But the other cool part is, Tommy, do you know, I know Jesse set up, Jesse is their marketer. He's in charge of all great things marketing for the company. There is another webinar coming up in December. Has he told you that date yet, or, watch for emails about it?
Let me look. Jesse's our CMO. He's the brains behind the whole operation around here.
Yeah.
I'm sure he has it on my calendar, but I'm not sure when it is. But
yeah, great question from Xavier. Does Tommy's company operate in Texas?
Yeah, really good question. We're able to operate in all 50 states. So we file tax returns and set up entities and do estate plans in all 50 states. It looks like December 12th, we're going to have another presentation.
Awesome. Now, do you have an office in San Antonio by chance? A follow-up by Xavier.
We do not know. So our only physical locations we have three physical locations here in Utah. Everything else is based off of Zoom and based over the phone. And, it's some people love it. Some people dislike it. Unfortunately, our headquarters and our operations are based out of Utah, but we do have a full team of accountants that can file nationwide.
I love that. And obviously, if you're watching this on your cell phone, you can't do this. But for those of you watching on desktop or your tablets, take out, you can scan the QR code right there. There's the link as well, primepartner.info/WRE news. Be aware that, yes, this is being recorded and will be available to you as well as on December 12th. We're having Tommy back again. Very, very excited about this. In fact, one thing we're talking with them as well, and I don't know if Tommy was aware of this, we're getting ready to have our conferences for 2025. We actually have conferences coming to you in Phoenix, in Salt Lake City, in Dallas, in Miami, in San Diego, in Denver, and in Atlanta. And so we've been working with Steve to see if we can't get them coming out as well. So you could meet them face to face in one of those cities, hopefully near to each and every single one of you as we hold those conferences and have that taken care of. Tommy, if you were talking to your family right now, what is the most important thing from what everybody was learned today you would say they need to focus on? What's that really big, final, passionate, okay, you really have to do this?
From an entrepreneurial standpoint, so I mean, going back to my legal disclaimer here, so I'm not a CPA or an attorney. I started this company as what was a sales company that has now grown into, I've acquired multiple accounting firms and have law firms, and keep the main thing the main thing. And what I mean by that is you are real estate professionals. The goal is to generate income. I hope that when I come on here, I don't scare you about asset protection and about taxes. I can have my attorneys give these presentations and scare you half to death, or have the accountants come bore you half to death. But the big takeaway that I always share with people is when you ask an attorney a question, their goal is to protect your assets. When you ask the accountant the same question, a lot of times it's the path of least resistance to file a tax return. The truth for an entrepreneur is oftentimes somewhere in the middle. So that's one of my favorite parts now that we've grown, is I get to put our head CPAs and head attorneys in a room and force them to find common ground. They hate me for that. But track your expenses. It is the number one tax saver, and it's the thing that people really dislike doing. 99% of audits, it's like 99.2, I think it was last year, 99.2 or 3% of audits happen on the individual level. Less than 1% is on the business level. If you treat something like a hobby, it costs you money like a hobby. When you treat something like a business, you reap the rewards of what businesses have to offer. Set yourself up as a business owner, because that's what you are. Play the part, track your expenses, focus on your lane of genius. I think that's the beauty of being self-employed, is you get to do what you want to do. I like giving these presentations. I get to hire out the other places that allow me to put more focus into what it is that I like to do. And I would preach that to you. I know that a lot of you are not going to love taxes just because of this call. But if you have a team of people that are in your corner, and year over year, you have one new tax strategy a year that saves you a couple $1,000s, in 10 years, that compound really makes a big difference to better your legacy, better your kids, your grandkids, and your overall financial landscape. So do what you love to do, hire out the rest. But remember, taxes, Benjamin Franklin said death and taxes aren't going anywhere. So we might as well get vaguely familiar in order to maximize on what it is that you're doing.
Well, and that was before individual tax began. I love that slide. 1913, Social Security, 1937. Property taxes, weren't those invented in the 50s, right? That taxes aren't going away. They just seem to keep growing. And no, Tommy, thank you so much for taking the time today and the information that you've brought forward. And I love not only that, hey, you represent Prime, obviously as the president, but I love that you own 78 doors. I love that your mom, your wife, your dad with his brokerage, you have an understanding of what our subscribers need. You have an understanding on a personal level of, listen, this is the great stuff. One last question. We have just a couple more minutes. Is there an app that you recommend? There we go. Yeah. So Crystal Sherman, are there any tracking programs you recommend? Xavier, an app, for scanning receipts? What is this something that you want to recommend during your consultation with them? I don't want to take away, but.
Yeah, no, I'll just tell you. I'm an open book. You ask a question, I'll give you the answer. And if I don't know, I'll tell you I don't know. I have, fortunately, bought every tax app on the market for all of you and done all the research for you. So here you go. QuickBooks is the universal language of accounting. If you are, one of my favorite books in the world is Rocket Fuel by Gino Wickman. It does a really good job identifying visionaries versus integrators. Visionaries tend to just go make money. They're not going to want to integrate with QuickBooks for most of the time. Integrators, if you like the details, QuickBooks is great. For those of you that want the path of least resistance when it comes to a tax app, there's a really cool one called Keeper, Keeper. If you search Keeper or Keeper Tax, I think it's like $130 for a year. Tax deductible, by the way. Make sure to track that. But what I love about Keeper is you can connect your credit cards, your bank accounts. It'll text you. It'll say, John, I noticed that you just went to lunch. Was that business related? You just reply yes or no, and it tracks it for you in the app. So it's a really big software-based company out of San Francisco, but Keeper Tax for $130 a year. It's like having a bookkeeper that you'd pay a couple $100 a month for. QuickBooks is great. Keeper Tax is simple. They both have pros and cons, but I would look into those too. And then also Mile IQ, something to track your mileage as well. Agents drive a lot. I'm very aware of that. And tracking your mileage is something that is very important for agents. That's one of the low-hanging fruits for the IRS to audit, because a lot of people just don't track their expenses. 90% of audits lose, and it's just because they don't have the record keeping. The 10% that win the audits and track their expenses, it's because they track their expenses. And I kind of joke, we all watch enough crime television nowadays. You got to have an alibi. So track those expenses and give yourself an alibi in the worst case scenario of an audit.
Oh, I love that. And it looks like someone already put it in there, Bill, Keeper Tax. And once again, keeping track. I love that. I love that it texts you and says, hey, was this business? Does it just be, how many credit cards can you tie to it? You know, things like that. Is it just whatever you tie to it, it asks? Yeah,
you can tie as many credit cards as you want to it. And if you have like 10 transactions in a day, it'll text you and just 1 through 10. And then you reply 1, 4, 6, 9 on what cool. Which ones are business related. And you just put the number in there and it tracks it right in the software. It's really slick.
And did you have a name for that mileage app?
Mile IQ is my personal favorite mile tracker.
Mile IQ. Perfect. Oh, thank you, Patricia, as well for putting that. So yeah, perfect. All right. I think, and this goes without saying, that everybody, the amount of comments, the amount of interaction, the desire, people's, in fact, one of them says, hey, thank you so much. I can't wait for my consultation. And so that's one thing I do want to end with this. Obviously, Prime is offering not just all this information they've taught today, all these information that Tommy's given us for free, but on top of that, it is a free hour-long consultation that they'll go through you with your business. And you can go, once again, take advantage of this. If it were me, it's free 99, right? So take the consultation, see if there's something you can do. Tommy, on behalf of everybody here, we're having a whole bunch of people on the right saying thank you, thank you, thank you. Charlene, thank you for a great session. My consultation is booked for tonight, so that's fantastic.
Nice.
So awesome. We're excited about this, and to everybody, thank you once again for joining. December 12th, make sure that you also come back. Tommy will be back with us again. If you have other real estate agents and friends that are interested as well for their individual businesses, make sure that you share the link with them once that email comes out inviting you to register for that. But on behalf of everybody here and our new 12-week-old puppy Winnie, thanks for joining us today, and we'll see you next time.
Thank you.